Hi, and welcome to Matrix Moments. Today's podcast is titled Cashing In on Crypto. And I have with me Aakash, who goes by Cash, my new colleague at Matrix. Aakash, welcome.
Thank you.
Aakash, we've known each other for really long. I think it's been more than 10 years. We first met when you were at Housing.
At the housing terrace.
At the terrace, that's correct. And you've had a fantastic career since then, and I'm sure it's going to get only better with your journey at Matrix. For those listening in, maybe if you could just walk them through the journey before joining and focus a little bit more on the crypto piece of it, where you started investing in this space a long time ago.
Yep, I think across a lot of diverse roles, and we met at housing. Life started for me earlier, I think in 2009 as a founder, trying to build a recruitment classifieds and failing at it. Then went again at it with a gaming company, again failed at it. And I think that is when housing happened, where I spent most of my time leading product and strategy. Post which, spent some time at a company called IndusOS, again leading product, strategy, and monetization. And then Hotstar happened, which is where I ended up spending the last 4+ years before joining Matrix. Again, across an intersection of roles across product, business, strategy. And I think that has been the common element always. But jumping to crypto, I think that diversity of having looked at marketplaces, having looked at content, and I keep saying that crypto is this two-pronged phenomena of both a cultural force and a technological force. I think that just happened sort of naturally. I think a lot of it goes back to the gaming DNA. I think like anything in internet, gaming tends to be one of the first ones to latch onto it. So the initial chatter also, even within crypto, came from the gaming and the dev community. And for me, that started happening sometime around 2013. Actually, it happened because of my brother, my younger brother. When I was running a gaming company, we had these nice heavy-duty machines which could do crypto mining, which could do Bitcoin mining. My younger brother used to work with me, and he started doing that. And that was actually my first introduction to proper crypto. Even though the origin of it might go back to spending time reading Satoshi's first paper, thinking about everything to do with, I think I keep alluding to it a lot, philosophically it is also almost a denationalization of money sort of movement. So all of that happened, but yeah, true hands-on engagement with crypto started in 2013. Slowly it became a pretty much full-time activity. I think sometime around 19, well, I'll run through that journey. So around 15 is when Ethereum came into being. And this is the post-Bitcoin world. Ethereum was the first time you had the concept of smart contracts and programmable money coming in, which was transformation, which for me was a great moment in terms of saying that this is going to be the way everything works. Like if you go back to what Mark Anderson keeps talking about, software eating the world, for me that was a belief moment saying this is when we truly eat the world. As an entrepreneur, as someone who's been in consumer tech, this was super exciting. Started tinkering around with it, started getting involved with a lot of crypto communities, a lot of blockchain communities. And that led to building a much more deeper perspective. The so-called rabbit hole, I went down the rabbit hole in a very, very different way with a lot of the first early starters in this domain. And around 2017, even though I'd started doing the public token market investing much earlier, around 2017 is when I started actually also sort of doing individual investing of my own in early stage companies in crypto. The first ones that I went after were infrastructure companies. I think when I was looking at the crypto architecture, you had a backend which was fundamentally very different. You did not have your usual database logic app layer. You now were talking about having blockchain as one part of the layer. Then much later, we also started seeing layer 2s. We started seeing identity becoming a different part of the stack. This was a completely different stack. And the first thing I did was, this is too complex. I tried setting up one up myself. That's the first thing we tend to do. The oldest habit used to be in the Early days used to be buying domains and then trying to set up a website. Over here also tried to do that. Found it to be super hard. And my first set of investments were purely about companies who are simplifying this. Because if this is how developers are going to build new applications, someone just needs to simplify this. So the first set of investments were companies like QuickNode, Blockdaemon. Uh, these were all pure, not really Web3 or crypto. They were pure SaaS-like companies, simplifying crypto and helping developers build better. The second sort of wave or the trend line, which I caught on to pretty soon, was the shift to proof of stake. So in crypto and blockchain, we keep talking about consensus mechanisms. And Bitcoin, which was sort of the origination of how the crypto movement came into being, was on proof of work, and which is a very energy intensive way to do things. Proof of stake is more capitalistic in nature. It's simply like just to make it do a for dummies version would be, hey, if I have X amount and I have more amount, I have more at stake. And if I do something wrong, if I'm a bad actor, I lose more, right? And hence things work out instead of moving to a proof of work where you're competing for compute and trying to be the one who is adding to the block. Over here, proof of stake sort of becomes a decisioning method to drive consensus. Again, took that trend line, spent time with most of the community who was working and thinking about it, made a lot of investments in that space. So saying proof of stake is a trend line, ended up backing a company called SSV, which emerged out of the Ethereum Foundation. And they were trying to do a shared secret validator protocol so that when you're running validators, you don't have slashing risk and all of those things work out. Again, very infrastructure SaaS-like approach to it. And I think for me, that was a common theme, more skewed towards saying what is the real tech and invest behind that, and less to do with the usual suspects of DeFi and GameFi. I did participate in those after one point. But proof of stake backed SSV. In India, there was a great company which emerged called Stadia Labs, was one of the early backers in that. Again, they were playing to the proof of stake trend line. Post which, obviously now, you're moving up the stack.
So going back, so 2013 started mining, 2015 started getting into the space more actively, 2017 started investing, talked about the first trend line, talked about the second one. Through this, your portfolio that you had started constructing as an angel investor, was it all crypto or did you do investing outside of that as well?
I think I used to enjoy collaborating with founders in the 0 to 1 stage. So individual angel investing started way back around 14. I think in entirety, crypto obviously grew towards the fag end of it. But over the last 8 years would have ended up backing 70 plus companies. So a good chunk was purely the bread and butter of SaaS and consumer. Crypto started much later.
How are the founders different in the early years?
I think the earlier founders over here were more of the, what I like to call the hacker archetype, right? Like in consumer and SaaS, you would find people who have had exposure to that product problem statement. Whereas in crypto, you can't find that. That's not going to happen. It is going to be ground up, completely a founder coming in and imagining and thinking, hey, this is what I can do. This is how I can contribute in moving the ecosystem forward. So I think that is one primary difference, that it is the typical hacker profile which was getting into crypto early. Because in Web 2, the distinction would be good founders would always be people who have been exposed to the problem statement. So I think that was one big difference. The second big difference was, I think, a mathematical bent of mind. Most of the founders, when I look back, they were mathematically and financially well versed in terms of thinking of capital markets, in terms of being able to think through how do they think of designing their tokenomics. All of those pieces, that was the other trait which I saw. Again, not a must-have which used to be there in the Web 2 archetype. I think those two were clear, differentiated aspects of the founder in this space.
Got it. So for you, at least in your crypto investing journey, what was the turning point? Like when did you actually feel like, it's more of a passion kind of portfolio, now it's actually looking like it's real and it's actually got some momentum behind it?
I think it happened sometime around 19, and obviously during the 22-21 period, that was a different time zone completely. I think around 19, what happened is I realized that I was spending time during my day job driving growth and doing everything as an operator. But initially, what started only as weekends, wherein weekends would go reading, tinkering, talking to founders, working with them, it started overflowing into the weekdays, right? So weekday evenings started getting eaten into. And when that started happening is when, and by that time the portfolio had also, both on public tokens and private investments, was becoming substantially large. Uh, One reason obviously being that the inflection in valuation in crypto is much faster. I don't know whether it's good or bad, but it is much faster, and hence the portfolio was becoming larger compared to the overall one. And which is when around 21, we started engaging, and I was considering very strongly to move full time into doing this because I realized I enjoy this more, and this is where my heart is. So would love to do this as full time.
No, I remember the conversation. So it's great to have you here, and I know that our own journey on where to invest, where to spend time, frankly, where not to spend time, has been informed a lot over the last year, thanks to you. You spoke of the first two trend lines, and then we shifted. Maybe if you could just for the listeners, just maybe walk through the overall crypto portfolio and construction, and maybe also a little bit of what you learned from those early companies, and what of those investments and those models still holds true. What has completely changed thanks to underlying change in technology?
I would see in retrospect always one can put method to the madness. So I'll put that caveat out. I think mostly it was going after trend lines, right? But later the other part of the folio was more of saying, okay, we have solved for proof of stake. We have gone after the infrastructure for developers. What comes next? What comes next is higher order products and applications. And one of the beachhead for crypto, and which I still think could be, and at least 2-3 years back, all of us in the ecosystem believed would be, was NFTs. NFTs, GameFi. I think those two narratives I did, and because of previous background in gaming and always having been a gamer, those two really stuck a chord. And I again went after backing and working with founders who were trying to build NFT infrastructures. So this would be companies like, in India you would have NFT Khalid, D-Hidden. There would be companies like Artiverse, which is gaming metaverse. Again, I'm using a lot of these buzzwords, but a company is trying to build within that space. So a lot of GameFi projects which came out of Southeast Asia. These were companies which were, and for me, the evaluation framework, and I will come back to the portfolio construction also. I think in gaming, thankfully and luckily, I got one thing correct, which was a game always needs to be a game. I do not subscribe to play to earn. You play to play, and you play for fun, and everything else is a secondary outcome. And I think having that lens of being able to talk to founders and evaluate projects which were real games, which would leverage the financialization that crypto brings, I think that really helped in being able to pick what I would call winners, which would be long-term GameFi companies. This would include the likes of Nine Heroes, Krabada, again, non-Indian companies. Gaming has not really been an area of strength for us in India. I've been a victim of that myself. But so GameFi, higher order applications. Lastly, the last leg of individual investing was behind enterprise or DAO tools, which would include companies like DAO Lens, and a lot to do with the financialization or the open finance ecosystem, which is about bringing more efficiency to fintech, reducing rent-seeking points, and just making things more efficient. Trade finance on chain, backed a company called Polytrade. On again, on the real world asset lending side, worked very closely and backed a company called Mohash. Uh, so yeah, I think broadly the construction of the folio was gravitating towards SaaS, fintech, and some element of gaming creator.
Very exciting. I think, frankly, the diversity of the portfolio is what's even more interesting than the fact that you've gotten into so many exciting companies, because there's different trend lines. And I'm just now thinking back, at least a couple of the names that you mentioned continue to be very prominent companies in this space. So I'm hoping that the portfolio is doing well. I know that the drawdown has been a little painful for folks in the last 6 months. I'm guessing no different for you.
I think one thing which happens when you have started in 13, there's a meme which was circulating in the last few months, which was for people who got into this for whatever reasons, maybe post 17. I think I've gone through, this is the third one, so it's okay.
Yeah, you've said this before, right? Hype cycles are needed, and the inverse is also true.
Hype cycles are always needed. These hype cycles always tend to bring, and going back to what you were asking about founders, these hype cycles always bring new set of founders. And these new set of founders in a space where you're imagining what you can do with these transformational pieces. I think new founders bring new energy, hence new narratives, and hence more innovation. So these hype cycles are always needed. We are working with a financialized world, especially in crypto, from day zero. So these hype cycles also lead to worse drawdowns, a lot of pain for a lot of retail investors, but that's part and parcel of how this world is.
What are the trend lines you're spending time on now? Like, what are you excited by now that you've spent a little under a year here? You're hopefully calibrated on all that's going on out there in the ecosystem. What are you excited by now?
I think what I and we as a firm are excited about remains pretty much the same. I think those core trend lines are saying fundamentally what blockchain does and as a technology and what it enables, and two, the cultural shift towards decentralization, which actually is the underlying force behind it would be, can we create more equitable distribution? So when I say more, I would stress on that word. We have had in Web 2 itself companies like Airbnb, which I think have distributed more than 100 billion plus to stakeholders, owners. So it's not that Web 2 has not been distributing rewards, but more equitable distribution of value to positive contributors. A lot of the companies in Web 2 have been built with the other stakeholders beyond the company and the cap table. Now, more equitable distribution gets enabled through tokens. You have blockchain bringing efficiency into finance. The thesis areas still remain the same. It is an innovation you can do in capital markets. You can design newer products for capital markets. You can reduce the cost of doing transactions. You can do securitization on chain, which allows it to be transparent and tamper-proof. So that's everything to do with finance. You can go after enabling every developer who's going to come in and help build this, which is a SaaS theme. And the third theme, which is probably not as hot for us or for me, would be the end consumer utility. I think over there, crypto and blockchain still lack a hero application. And most likely it's going to be an outcome of serendipity. I think everything we have seen till date has been more a force fit of trying to say that, let's imagine and then let's build it. I think over there it might just be an element of serendipity. So hence over there, yes, we do believe there are thesis areas like ticketing, NFTs in music, creator NFTs, but I would say lukewarm on those.
Now, I was going to say that you started off saying that more equitable distribution, and I'm just trying to imagine outside of the creator economy, I can't think of a single use case that has emerged thus far where that statement is actually true.
Very true. It hasn't. It actually hasn't. Let me correct that. It has in smaller impacts have happened in there is decentralized networks like Helium Network, which is trying to create a distributed wide area wireless network, right? So there are pockets where we are seeing that happen. And again, as I said, blockchain is still trying to find its end utility purpose. So some of these will keep emerging over time. But majority of investor money, venture capital money has actually gone after, on the third aspect, which is the consumer app or the utility side, has still gone after trying to drive narratives that we believe in, but not really where we are seeing real demand side growth. So till the time demand side growth kicks in, and maybe there are lots of things which need to happen for that. You still need to solve for the consumer experience in crypto. Like if I was to ask you, how has your experience of ever interacting with crypto been? It's not that great. So I think those things still need to get solved, and most likely some fine day one great founder would emerge who would show us that path, that this is what blockchain and tokenization can do for end consumers.
Yeah, no, awesome. I think the one thing I wanted to just close out this topic was you spoke of what the founder archetype in the early years was. How has that changed? And this one magic application or this one magic founder, if you had to speculate and say what kind of archetype would that founder likely be, what do you think it would be?
I think there's been a positive change. The positive change would be we are now seeing people who have built products in the Web2 world embracing crypto. The earlier adopters were not necessarily from that world, not necessarily people who came with an experience of having tackled product problem statements. So that's one. On the question of the archetype of a likely founder who creates that hero app, I would say most likely would be someone who comes from a Web2 consumer tech background, has looked at the decentralization equation as a spectrum. So what tends to happen in Web3, and hence there is a lot of polarizing views around it, is builders tend to be very 0-1 in terms of decentralization, centralization, very anti something which has already been there. I think founders who would come with experience, who would embrace the goodness of what a lot of stuff that centralization used to have, and then figure out saying that fundamentally you want to solve for equitable distribution, fundamentally you want to solve for transparency, you want to solve for permission data access, pick those things and then build out something which is as transformative maybe again as Airbnb. I don't think any of us imagined Airbnb when it happened.
Yeah.
A founder archetype like that would surely create that hero app.
Cash, thank you. Really enjoyed the chat.
Thank you, RBS.
And let's pick this up in 6 months.
Yes, for sure.
Thanks for tuning in. For more Matrix Moments episodes, you can head to www.matrixpartners.in/matrixmoments. You can also follow us on Twitter, LinkedIn, and YouTube for more updates.